Hi, I'm Owen from Rask Australia. Thanks for tuning in to the Rask Network.
Before we get into today's show, there are a few things we have to go over.
Firstly, what you're about to hear and see is limited to general information only. It's not personal financial advice like you'd get from a financial planner. Also, it's important to remember that past performance is not indicative of future performance. That means that anything that's happened in the past, or we say today, is not necessarily going to reflect what happens in the future. Lastly, please consider that any of the guests or myself are featuring on this program may have a financial interest in some of the products or shares mentioned. That's enough from me. I hope you enjoyed today's program.
Why Tim Tams?
Well, look, if you have to kind of cast your mind back to when the business first launched, when it was literally out of my garage in like 1999. And in the very, very, very early days, I didn't have any money for marketing. And so I really had to just kind of rely on word of mouth. And so the whole idea behind it was to just kind of try and think of enough sort of surprise and delight that would go into the box that at least somebody might tell one other person, because that was really all I had to rely on back then. And in the early days, it actually wasn't Tim Tams, because a lot of my very early customers were from the US, because they were just kind of further ahead in e-commerce than we were here in Australia. And in the beginning, it was actually furry friends. Do you remember furry friends?
Yeah, they were the square.
The little square ones, yes, and
yeah.
They had like little Australian, like marsupials and things on them, and the Americans absolutely loved them. But then, in the warm weather, they were no good because they were too melty, and so that's why we ended up with Tim Tams in the end. But I think the reason why our customers love them so much is because what it kind of represents is that this order, it's actually about self-care. And so it's not about, here are some things to make you, look half decent. It's not even about that. This is a treat for you. It is not for anybody else, which is why it's just a single Tim Tam in the wrapper. That one is yours and you get to eat it. So that's why I think people love it.
I have a question that's kind of related to this, which is bringing us up to today.
Yeah, go on.
How much do you spend on Tim Tams every year? Because I imagine there's a lot of Tim Tams.
It's actually like pallet loads of Tim Tams.
Yeah, right.
It's quite funny. Yeah.
And it's such a good thing. Where did you get the idea for it? Back in the day, where did it come from? Did you just think, oh, this is just something neat, or?
I don't know. You know what? It's such a long time ago. I actually can't remember, but I was just trying to think of ways that I could make that. The moment that a customer opens their box is that's the moment that you actually have their full attention. You really don't have their full attention at any other time. Like even when they're on their phones or on your app or something, there's a TV on in the background or the kids are asking them for something, but that moment that you're opening your order, you have their full attention. And so I tried to, I guess, think about what are some ways that we can make this moment special and give people like a good feeling when they open an Adore order. And I think that still works. Like back in the early days, I was also kind of wrapping everything with like this blue tissue paper and raffia, which it probably makes a lot of branding people want to throw up now, but it was the late 90s. Raffia was cool. But yeah, it's definitely stuck around.
Yeah. Well, take us back a bit too then. I've heard you say or kind of allude to that, you were very, very early, being e-commerce play. Tell us what the kind of environment was like at the time and why you saw this as an opportunity.
Well, you really do have to cast your mind back, and I'm always kind of mildly horrified to discover that we have people working at Adore who were born after Adore was started, which fills me kind of with horror. It makes me feel ancient, but it was so pre-smartphone, pre-Facebook, pre-broadband. So I could only afford one phone line, and so I'd have to kind of climb under my desk to unplug the modem and plug the phone back in every time I wanted to log on or off. So it was very, very early days, and really where prestige beauty lived was in department stores, a little bit in pharmacies, but mostly in department stores. And that was where I worked as my part-time uni job, and was able to observe, I guess, that from a customer's perspective, wasn't necessarily a great shopping experience. Not a lot of access to information, really hard to make good choices, and in a lot of cases a bit intimidating and unpleasant, and scary saleswomen like myself on on sales commission and with targets to hit and all of that sort of thing. And so to me it was obvious that as a shopping experience, particularly if you're thinking about a category that's supposed to be about self-care and about a product that makes you feel good, that shopping experience was broken. And this was really super early days of online shopping. So in Australia there was I don't know if anybody will remember back then, but there was like D-Store and Wishlist and but not a lot really, and there wasn't anything for beauty. And to me it was just really clear that I think a lot of customers would probably prefer a different way of being able to access these products. And wouldn't it be great if you could actually read all the information and be the one in control of your shopping experience, be the one deciding, well, actually, I want to buy this from this brand and this from that brand, which department stores really didn't let you do. So there's a lot of barriers put in place for the customer. So to me it was obvious at the time, but I think it just took probably 10 years to become obvious to anybody else.
Because I think I heard you say previously that this is the time when people were still faxing a lot. Doing that type of thing. So look, it was a very kind of clunky experience for a lot of people, right?
Absolutely. I mean, everybody still kind of had landlines, and not everybody had a mobile phone, and not everybody even had an email address. It was a different time.
How did you go about getting brands and stock to sell in those first few months, I guess? Like, how did that start? Like, what brands did you choose? And tell us a little bit more about that origin.
Well, it was less about the brands that I could choose. It was more about taking what I could get, because pretty much I would say the resounding response from the beauty industry was no thank you. And which I don't think was really sort of anything I'd anticipated, because I was actually asking to, buy their product. I had my money that I borrowed from my boyfriend's dad to be able to go and buy stock, and just nobody would take my order. So
is that because you were trying to get it cheaper, or
no? Not even. No, it's the thing with the beauty industry is that the brands really like to control the customer experience. And I guess what I was effectively asking them to do is kind of, hey, let me disrupt this entire, effective business model that's been working for everybody perfectly well since department stores started in, the 50s or whenever it was. And, here's me as a 21-year-old student with no business experience asking to disrupt the entire way they did everything. And the perception of online at that point, like the only context that anyone had for shopping was things like eBay. And it was considered that customers wouldn't want this, that customers would not want to shop for beauty in this way, and that this was not an appropriate channel for prestige beauty products. This was unsuitable. And so, yes, I think the internet was a hard pass for most of the beauty industry back then.
How about, so there's two things that probably I would think of being in early 2000s at least. Two things that probably stand out for me is people obviously trusting that they're going to get the product. So you've talked about kind of like the actual experience of, well, why would I do it online when I can just go to the store? That's the first one. The other one would be trusting the experience and actually handing over their money. How did you take payment in that? Did you use something like PayPal? Was PayPal around available too?
Not at the very start, I don't think, although I'm trying to cast my mind back. I do remember it being very difficult to get a credit card merchant facility. There was only one bank that would let you process credit cards online. I remember that was St. George.
Right.
And just nobody else, literally nobody else offered it. You could not do it. So it was, and yes, I would say definitely the whole concept of online shopping was very new and very scary for a lot of customers, and people very worried about using their credit card online, and just not really understanding, why you would do it or what the benefit would be. And so it just took a while, because yes, the brands didn't want to be on there and the customers weren't really into it. So hence I guess, the whole kind of business model being about 10 years too early. But, in retrospect, if I think about it, it was kind of a blessing in disguise, because I had such little capital to actually start the business. The way that I kind of see things is that you got two sides of the scale. You've got money and time. And so if you want to go faster, you need a lot more money. I didn't have any money, so I needed to be able to go slowly. So it actually kind of worked out in the end. So I just kept the cost base of the business really low, and so that it could go through cash flow until it got to the point where, and this was, you're thinking kind of 12 years into the business, until it got to the point where it was growing too fast for the amount of capital that we had. It took a while.
Did you take a wage from the beginning?
Not from the very beginning, no. I was still studying, and so I was living on Study.
Yep.
So which was whatever the government payment was called back then if you were a student, and they had a thing where you could trade in half of it and get a loan back for kind of twice the amount, because it wasn't actually enough to live on in Melbourne by itself. So yes, I lived very frugally for a couple of years before taking a wage out of the business. A lot of those packet mee goreng noodles.
Yeah. No, my business also went through a kind of really trying moment. I think all good businesses have to, as a rite of passage. And one of the things that one of our shareholders told me is, the first thing you need to do is figure out your ramen number. And I was like, what do you mean ramen number? And he's like, the absolute minimum. If you lived on noodles, what would that be? Like, that's the number that you need to know.
Yep.
And it's true, right? Like, if you're a young entrepreneur, let alone student as well, you've only got two ramen numbers probably. So really interesting. But so obviously building a business like Adore, in the beginning, you have, it's a platform, right? You have the customers, and then you have the brands.
And the brands. Yep.
Yeah.
Sure.
I heard you say in a previous podcast that you did that one of the keys was actually getting a bigger net. So basically convincing brands to let you sell. And I'm just curious, how did you go about doing that? Once you started to get in the groove of it, I heard you are very good with pitching, in particular, like finding out why people say no, and then working around that. So can you walk us through some of the strategies that kind of worked for you and what you look for now?
Well, I think social proof is a really big thing, right? So when I first approached, like at the very, very start, when I approached all the brands to be on the platform, and they all said no, except for two. And so I took the two that I could get, and then at least, got the website up and running and launched so that people could see it. And then went back to everybody again, and another 5 said yes, because they could see, oh, okay, right, I can see how this works. I can see that they're really doing it, and it's a real thing, and you're going to go through with it. Yes, okay. And so then I had 7 brands, and then you could go back to everybody and say, look, I've got these 7 brands, and then you'd get a few more. And so there was a lot of that. I think there was a lot to, like, the really important part for the big international brands, like their biggest asset is their brand equity. And if you're talking about brands like, Estee Lauder, I mean, that is the absolute most important thing that they have, and they defend it with their life, as they should. And so it was a long process, I think, of building up the trust to be able to demonstrate to them that, first of all, that there are customers here, and that they are people who might buy your brand because look at the other brands that they're buying on our platform, but also to really being able to show that that we were trustworthy and that we were worthy of, being partners to those sorts of brands that value their brand equity so much. And so that was things like showing that we were able to represent the brands correctly on the platform, that that we had good photography, and that our customer service was at an appropriate level, and that customers buying their brand from us would get a good experience. There was a lot too around content, because one of the things that we've particularly started to build up in the last sort of 6 years or so at Adore is our content capability. So effectively, the part of the ecosystem that we are replacing is not just the department store, but also the glossy magazine.
Yeah.
And so that, to be able to show that we could do that properly, and that would cut through, and that would resonate with customers. But that process to build up trust, it takes a long time. It's not, there's no overnight path to trust. You have to do a million little things right for a really long time to build that up with both with brands and customers, right? That trust piece. I think that's where for us at Adore, our values have been so important, because one of our core ones is doing the right thing, which is all about having integrity and making sure that if you ever make a mistake, that people know that you'll own up to it, and that you'll fix it. And I think that's been really crucial in our journey of building up these relationships that we have with our brand partners.
Mm. Did I hear this correctly? Was it Estee Lauder that took 14 years?
14 years.
14 years for you to land. What finally got them over the line?
Oh gosh, it's a million little things. It's a million little things. Look, I think in the end, what's been the story with all of the brands is that eventually they see that e-commerce is here to stay, and actually more than that, e-commerce is the channel that is going to be driving all of the growth in this category going forward. None of the growth is actually coming from bricks and mortar anymore. And so that's where you finally see brands kind of, and it's a thing that actually you kind of have to wait for it to happen on a global strategic level. Yeah. So for instance, our authorization to sell Estee Lauder had to go all the way to New York, because we were a pure play, and that was so different. So you're waiting actually for kind of global strategies to change sometimes. And I guess making sure that when they do change, that you're the partner of choice, because you've demonstrated all of your credentials, and you've shown that you're going to be the best person to work with.
Yeah, I've seen, obviously reading through Adore's financials and your reports and what have you, and then also the likes of Estee Lauder, I can see that it's pretty obvious how big this online industry is going to be. Not only it's already big now, but how big it's most likely going to be in the next 5 years, which is extraordinary. Like it's a massive, massive tailwind at your back, right?
I mean, if you look at where it already is in places like China and South Korea, like where it's pushing, sort of 50% of all retail sales are coming from online. Now, those markets have evolved a little differently, because they didn't necessarily start with the big bricks and mortar networks that we have here. But that writing is absolutely on the wall that, yes, online is going to become an increasing share of customers' wallets. Because I think in most instances, and for most purchases, you can actually provide a better experience online than in a store. Yeah.
While we're on this, how about things like, I don't know, I imagine you've given this a lot of thought, but things like virtual reality and kind of the move towards this kind of, as Facebook would call it, like the metaverse, but basically this move towards more like virtual, the ability to try on makeup and do all this type of stuff. Do you see that replacing a lot of that in-store experience, or do you think the in-store experience is still something that will have to be here?
I don't see, I mean, in the end, I see those sorts of experiences as kind of complementary. I think for services particularly, there are still going to be things where customers, I mean, everybody's still going to be getting their hair cut in 10 years' time, for sure. Right? Like that's still going to be happening. There are certain things that we cannot do online. Like we can show you how to apply, individual false eyelashes, but it's still really fiddly. And actually sometimes you might, for a special occasion, you might want to get a makeup artist to do that for you. Like we get it. But I think in terms of actually in store as a distribution channel kind of becomes less and less valid. Like, unless there is an experience or a reason to go and do that, then I think it becomes less important. And I think certainly things like augmented reality are really exciting to be able to, try on products online. I like, the tech is kind of still not quite there in terms of like you can do it, you can make it look like you're wearing a lipstick. Can it make you look like you are wearing this exact shade of lipstick with the variations in finish and how it might look on you versus on somebody else? I don't think that's quite there yet. It's kind of more of a novelty. It's like a Snapchat filter or something like that. Like, it's fun, but it doesn't necessarily work the same as a try on. But when the tech will get there, and then I think, yes, that presents a whole lot of opportunities.
I heard you, and you mentioned this at the beginning, is just basically later on in the business, unlocking some of that growth potential was access to capital. And this will actually tie into something that we're going to talk to at the end. But I know you've raised capital a few times. As a small business owner myself, I often think that when you come up to people in the investment industry, they don't have any business experience. They're professional analysts, they're professional bankers, and they're like, okay, what's your metric? Okay, great. Yep. No worries. Okay, how do you explain this risk? I don't think that's going to work. And sometimes, maybe a lot of the time, they just don't get it. They just don't get it. Can you describe some of your experiences raising capital and approaching investors, and how maybe, I guess, how maybe you found those experiences and some of those partners that you took on, how they changed the business?
So yes, your experience of people not getting it, if you would like to perhaps just overlay that with being a woman founder and walking into rooms full of men in suits who, definitely do not get the product that you're talking about, yes, safe to say that was a challenging experience. Look, I was pretty lucky in the sense that I think the first time we raised capital, we actually sold a 25% stake to Woolworths in late 2014, and that only came about through an introduction sort of directly into there from a mentor of mine, and so I guess that was just a fortunate sort of situation of kind of being at the right place at the right time, although having done the work of building a network that made that possible. But I guess Woolworths as retailers certainly got what we were on about, and so that
did you need that money, Kate? Like, were you outwardly looking, saying, we need capital in the business, and we want smart money? Is that kind of the idea?
That was kind of the idea. It was that, yes, okay, well, I mean, you could go and just get a check, but also if you could get someone who could maybe offer you mentoring or help or expertise. I mean, Woolworths probably the biggest online retailer in the country, and they also had an enormous database, the Everyday Rewards database, that the plan was for us to be able to leverage, and so it kind of made a lot more sense than just taking the cash. I mean, in the end, it sort of didn't work out because the strategies kind of diverged. It didn't really make sense anymore. So, but we were able to raise debt to buy that back. So that was my first. Only took 16 years for banks to be actually willing to consider providing any finance. So that was a first. That was good.
That's a big thing to buy back 25. Was it 25%?
25%, yeah.
Using debt to buy back equity in your own business, I imagine, was that difficult to speak to the banks to get that type of capital?
Look, I mean, conversations with banks are never easy, I wouldn't say, and they always kind of involve having to put your house on the line or something like that. But I'd already done that so many times that I was kind of immune to that as a risk. So yeah, that's usually what you have to do with banks, isn't it? Unless there's property, forget it.
Yeah. Okay, so I heard you say once before there was a pretty trying, well, there were many trying times, but there was one in particular where you were worried that basically you may not have made the pay run that week.
Yeah.
And in that moment, you actually, I think it was this moment, you went into the car park with your partner and you had what most founders tend to do, which is have a cry, and just kind of just think about strategies. I guess there's two things here. But the big one is, how important is it and was it to you to have someone with you who's basically in the fight every single day? You know, there are a lot of founders like myself who kind of go it alone, which can be really, really trying at times. How important was that support to you?
I cannot imagine actually being an entrepreneur and going through that journey without a co-founder. So hats off to anybody who's doing it. It is so hard, and I think so few people, like, unless you've been through it yourself, I don't think you really understand. And so even if you've got, you know, good friends and that kind of thing, I think unless they've done it, they probably don't really get it. And so yeah, look, for me it's absolutely essential, and I don't think I would do it on my own. Also too, I think from a lot of perspectives, you know, to have kind of your starting bench with a slightly diversified range of skills, I think is really super useful. And, you know, my co-founder at Adore, James, he and I have developed very complementary but non-overlapping skill sets. And so, you know, so the two of us together were a pretty amazing and fully fledged CEO. But I think that's why I think for solo founders, it's so important to have a support network. You know, have mentors that you can phone up and, you know, who will kind of cry into a beer with you, or you know, networks of other founders. And there's so much more around in the ecosystem now in terms of support for founders than there was when I started. Like, there was literally nothing. You know, there was no accelerators and no kind of networking groups or anything like that. But having that support is just essential, because it is really hard.
Yeah, it is. I can vouch for that. It is pretty hard. So, yeah, and I do sometimes get envious because, you know, I just even having someone around that understands the business intimately and can just throw ideas at you, but probably most importantly is challenge you.
Mm-hmm.
I think that's really important, because oftentimes we have a singular vision in our heads, and it's only when we kind of butt up against someone else that we realize that the direction that we're going should be this way.
Right.
Which is really, really valuable, I think, for a lot of people. Another thing that I noticed, which was really interesting in a I think it was the Lady Brains interview that you'd done previously, was that you basically articulated that when you went from, I think it was around about 10 employees to maybe 20, 25, and I think it was like a 12-month period or something.
Yep.
You said that there was basically like a change of culture, and you needed to sit down and decide on principles. And this is a really interesting thing in terms of businesses that into that scale up phase, is basically, how do we go, as in you, how do we go from being a technical person who understands everything about everything to inspiring others to do it, and do it in the way that I set out?
Yeah.
How did you come up with the principles that now kind of govern the culture of Adore and the way you interact with customers?
Yeah. No, this is a really fundamental piece of work that every single startup will have to do at some point if they want to be able to build a strong culture and retain good people. It is actually fundamental, and whether you do it when you have, you know, 20 employees, or whether it comes for you in a giant implosion when you hit 300 employees, like, at some point that debt must be paid. Like, you have to do the work, and the work is really a process of saying, what sort of company do we want to be? What do we want it to be like to work here? What are the standards of behavior that we set for ourselves when we interact with each other as a team, when we interact with our suppliers, when we interact with our customers, when we interact with the community? And for us, yes, as you say, it came at the time where we went from kind of being sort of small family sized to all of a sudden, 25 people is bigger than that. And I think we had, at the time, we sort of thought there were a couple of personality clashes, and probably what it was more about was that there were some values clashes, and it was not a pleasant time at Adore. It kind of became a bit of a toxic place to work for a few months until that all kind of sorted itself out. And I guess those of us that were left in the aftermath sat around and went, right, nobody wants this again. We do not want this to happen again. How do we make sure that going forward everybody is on the same page here in terms of how you're expected to behave towards each other? And so we actually went through this process as a team of basically, we like with a whiteboard and lots of sticky notes and going, okay, right, when things are great here, what are the behaviours that we see at play? Or the reverse of that, when things are not good here, what are the things that are happening? And we kind of grouped everything together, and we ended up coming together with a list of 4 core values that continue in the business to this day and really govern all of our kind of decision-making processes and the ways that we evaluate behaviour. And they're absolutely fundamental. And so they're the key thing that we hire for. So for instance, you could be the most experienced applicant for a job. But if you are not a values fit, you can't work here. There's sort of a no brilliant jerks policy, and that actually the behaviours are much more important than the experience or the skills. And so they go to things like how we hire. They go for all of our quarterly performance reviews. We talk about them every single weekly stand-up that we have. What are the values that we saw at play and the things that happened in the business last week. Like, we bang on about them all of the time, but you have to do that if you want to build a robust, high performance culture, and you want it to be a decent place to work. And for me, that's absolutely fundamental.
How do you determine during the recruitment phase? How do you determine if someone doesn't stand up against the values?
Look, we've got a bunch of sort of different questions that we ask, and they're usually kind of hypothetical sort of situations to understand how people would make a decision. So for instance, do you think the end, does the end justify the means? Like, if you've got a target to reach, how do you go about it? There's all kinds of ways that you can sort of try and get to whether or not a person can display those behaviours. But also too, the great thing about strong cultures is that once everybody understands the standards of behaviour, then it's not actually then just about the leaders reinforcing it anymore. Everybody does. And so, it becomes much easier then for everybody to kind of understand, what's expected of them here, because that's how everybody behaves.
Mm. Do you find that, do you find that people, even the newest people in the team, would come to you with concerns, or do you have some sort of feedback loop in place throughout the business to kind of let everyone have that opportunity to speak? And I guess just as you scale out of that, and you have scaled out of that, how do you keep those checks and balances active?
Yeah, look, I think that's where all your sort of communication processes are really important. We have pretty open communication at Adore. We also do regular, like nowadays, like particularly once you get to a certain scale, I think, the anonymous surveys are really super important. So yes, there are plenty of sort of channels for people to speak in, but also to make sure that you have those anonymous channels as well, that if there's things that people perhaps don't want to say in front of someone else, or maybe don't want to own up to, that at least it can come out. And that's always super valuable. But we're lucky now. We have an absolutely incredible people and culture team who manage to be the ones in the business that are really across everything, and because they do their jobs so well. I feel like there's very little that we don't know about, because it's just not that kind of a place, because they've made it not that kind of a place. You know, everything's done with a lot of consultation, everything's done with a lot of transparency, and so again, it's that trust, right? It's, you have to do a million little things right over and over and over, and that's the same whether you're working with your employees or whether you're talking to your suppliers or to your customers. Building that trust, and I mean, that's the thing. The leadership have to display the values better than anybody, right? And if we do that, then we build trust in how we will respond to things.
I'd like to switch gears just quickly and talk about how you go about, how you, as a $450 million business, as we record this, how you would go about building a brand, and then also how, you know, there are many of these smaller brands that are startups, you know, with things like Instagram and Facebook. They're using those to their advantage to launch, you know, products and what have you. And if you can talk about this at all, just in any general sense, how can you describe how kind of the industry works, and kind of what's required to get up to speed?
In terms of the beauty industry specifically, sure. Look, first of all, I think it's really important to have a clear idea of what your brand stands for. So again, it's that process of, you know, and so this is a process that we've been through with Adore as a brand as well. What are our brand values? What are the things that we stand for? What are the things that we never go against? You know, what risks do we take, and what do we not do? So that, you know, that is I think really important, in finding kind of a differentiated place to sit. What is going to be different about you compared to, you know, the rest of the landscape, or about your competitors. And so Adore is all about having very authentic and real conversations, and also too about making sure that our customers feel included, and that we don't dictate, or we don't talk down to them. We have a very democratic approach, and you know, our strap line is like, whatever makes you you. So, you know, we don't for 1 minute purport to tell you the way, you know, how you should do the beauty category. And that's kind of come from, actually, like, you know, people sometimes say to me, oh, I've never known how to put eyeshadow on. Like, do you think I should be wearing eyeshadow? We're like, well, do you want to wear eyeshadow? Like, you don't have to. It's perfectly fine. The only thing we'll ever tell you have to do is wear sunscreen, but everything else is like totally optional. It's just whatever makes you feel like the best version of yourself. Do it or don't do it. And we're kind of okay with that, which is quite different, actually, compared to the rest of the beauty industry. So finding that sort of differentiated place for your brand to play is, I think, really important. And then also, I think finding a way to cut through is really important. And so at Adore, we do that through the content that we create. So obviously we've got, you know, 3 of the top 6 beauty podcasts in the country, and quite a differentiated sort of voice in terms of the way we present, like our blog content and our video content. I think content marketing and knowing how to do it is just, you know, super important nowadays, as I'm sure I'm sure you're aware, given that we're literally on a podcast right this minute. But yeah, I think finding ways to go about it where it is a conversation with your customers, and where you're approaching it from the sense of, how can I add value to them? How can I, you know, educate or entertain or inform, or, you know, what am I doing for my customers? Because that's the actual thing about marketing, is that it's, you know, it's much more about what you can do for your customers, not not just kind of only having this sort of broadcast conversation that's not two-way. So that's kind of how I think about it.
Because there's actually a related point here, which is just on podcasts. Were you and are you surprised how well the podcasts have done, or did you expect this kind of success?
I don't think we ever expect this kind of success. Like, when you do new things, you never really know. And so the way that we approached it was that it was actually came about from a couple of people in the marketing team who'd been kind of lobbying to do a podcast for a while. And in the end, they came and sort of put forward a bit of a business case and said, rightio, why don't we do 3 trial episodes? We'll see how they go. And we need $12,000. And we said, you can do your trial episodes, but you can have $2,000. And they went, okay. and ended up finding, a way to kind of get it produced for that. And then I guess we just put it out there, and we're really, really happy to see that it did resonate, which is not to say that we haven't sort of continued to iterate on it. And, and the reason we have 3 podcasts now is because there's different kind of formats. Like our first one, Beauty IQ Uncensored, it's very much like a kind of a gossipy chat with girlfriends. And not everybody's into that. There were people who like, I don't want all the giggling and the dating chat. I just want to learn about skincare. And so we said, okay, and created Skincare School, which is, with a PhD in cosmetic chemistry. And it's like, okay, here is, like, if you want just the information, here's 12 episodes, and this will really, advance your education there. And so no, we kind of approach everything as a bit of an experiment. You never kind of bet the farm on anything, because you assume that, probably it's going to need a little bit of iteration. Some parts of it will work and some parts of it will not. Maybe none of it does, but that doesn't mean that you don't try it.
I think that's I think as you know, like as an e-commerce channel, there are basically 2 sides. You need to increase average revenue per user or per customer. You need to get them spending more. And the other side of it is you need to attract more customers. So if you get more customers and they're spending more, your platform spins up, and from a financial perspective, your business just works.
That's it.
And so being active in those channels really helps, right?
Yeah, absolutely.
Yeah. And that's why as an investor from the outside now, seeing Adore listed on this ASX, I can see that in action. I can see how much you're spending, what you're doing, and then how much you're getting back for that. And it's really clear and concise. There is something that I really want to get to in just a minute, but I've got kind of one more question on this, which is just basically with you personally, stepping back from the CEO role, having done it for so long, being so intimately involved with the business 7 days a week. People don't think about that. They think work is 5 days, but until you start a business, it's 7 days.
It is.
How did you go about making that transition? And what I'm particularly interested in is, how did you go about finding someone who could fill the void for you? Like, not in totality, but just in part. How did you find that person?
Well, so first of all, I actually stepped away from the CEO role in 2018. So James and I were kind of co-CEOs for the first 18 years of the business, until we sort of felt we found that the business felt like it was slowing down, like we couldn't make enough. We couldn't get to decisions quick enough. In the end, we realized that was our fault. The fact that, that there were 2 of us, and it meant that there were not sort of really clear enough lines of responsibility, and that was making everybody's lives actually a bit difficult trying to get us both in the room to get something done. And so at that point, we decided, okay, yes, it's probably best if I'll step away from that. And so my role became much more around doing a lot of the external facing things in the business, and James much more in the operational side. So he worked in the business, I worked, on the business from the outside, and that was fine. Like that actually worked for both of our skill sets. But we did also identify at that point that there was coming down the line a point where the business would be at a size where perhaps neither of our skill sets were really particularly well suited to what would be required from the CEO role. The job when you have a team of 200 is very different when you have a team of 50. And so we had split up the role in that way, and then said, okay, right, well, but within a couple of years, we think we'll probably actually need to go and hire somebody with a bit of a different skill set. And so that was the process that we started when Quadrant came into the business in 2019. So this is part of the sort of growth plan that we've made with them, is that we need to find and hire the right CEO to take the business forward for the next kind of 5 to 10. And it took a while. It took a while because we didn't want anybody coming into the job with, I guess, pre-existing assumptions of how how the business should work. So we didn't want anyone actually from the beauty industry. We didn't want anyone from traditional retail. Like, we really needed someone who could think about it in more of a disruptive kind of way. And then obviously even more important than that was finding someone who was values aligned and continued to build the culture that had made us successful to that point. And so, yeah, it took ages. I reckon it took maybe 8 months to find the right person. But feel very lucky that we did. And actually, when you find the right person, it's actually so much easier to be able to kind of transition that role into place, because they just fit better, right? And so Tennille is tremendous. So she comes to the role with experience in a similar sort of disruptive business, but at a much bigger scale. So she came from 10 years at Seek, having sort of started up and run different parts of the business there, and in international strategy roles, that kind of thing. But very much aligned with the culture and values and the way that we want to continue to do things into the future at Adore. So feel really very, very lucky, actually. I think when I had imagined hiring a CEO into the business, I never thought we would actually be able to get anybody like that good. So that was pretty cool.
Cool. It's just always an interesting conversation, because as investors typically want to see founders involved. They want to see, we're taught that if we're long-term investors, founders are the best because they're aligned in more ways than one. Oftentimes It's name on the door and whatever. One more question on Adore, and then we'll get to something that you've been working on more recently. Which is just, what are you most excited about with Adore as you look forward now?
Oh gosh, it's funny. I mean, we're the 21-year overnight success, but in so many ways, like as you say, the tailwinds that are behind us in terms of this inexorable shift towards e-commerce, I feel like in a lot of ways we're really just at the start in terms of what we can do. I feel like we've spent the last kind of 21 years prepping to be where we are right now, and particularly to now that we are a listed company and have access to capital. Like, to me, that was one of the most frustrating things about growing Adore as a bootstrapped business, because I felt there were so many opportunities that we just couldn't afford, and that was very frustrating. It's like having like a super smart kid that should really go to Harvard, but you can't afford to send them. And so this is why I'm excited about where we are right now, because I think we have so many really interesting and differentiated parts of our business model that we're really just kind of starting to grow and amplify now. So the content, I think, is really a super exciting part of our business, and I feel like we're just getting up a little bit of momentum there and getting started, and there's heaps more to do. We've got, for instance, our app that launched like not even 12 months ago and is really going well. And I think there's some really exciting parts of that product roadmap that will continue to play out. I think just the way that, we want to be able to own the destination for discovery. For us, like it's kind of moving past that sort of e-commerce 1.0 of, here's a place where you can buy a bunch of things. It's more about how do we be the place where you start your journey, and that every beauty journey in Australia and then moving internationally is starting with Adore. To me, that's really exciting, because the thing that really hasn't changed about our purpose and our mission is what we want for our customers to feel, empowered and like they're fabulous and best selves when they walk out the door every morning, or not walk out the door as it is currently.
Stay inside.
They stay inside. You know what? That's what I've been sharing with everybody on my socials, that it actually, like, do your hair and your makeup every day, because honestly you just feel so much better. Like I feel like that sort of descent into activewear just kind of makes everybody feel a bit wretched, and there's actually something to just spending that little bit of time every morning for yourself. But yeah, beauty is self-care, and I've kind of always said it. but being a bigger part of the self-care journey for more and more and more customers is just super exciting to me.
Yeah, I think there's a lot to look forward to. I'm aware of this transition for you that you've been working on, it seems now, for a little while, which is basically transitioning from operating a business to now investing them. You've made, I'm aware of a few investments that you've made already in your own right, I believe, and now it looks like you're formalizing kind of the way in which you provide support to founders and business owners now. And that, if I'm not mistaken, is through Glow Capital Partners.
Yes.
And it sounds really exciting. So maybe, I know it's new to the public realm, so maybe if you can just give us kind of, what it is, like what are you setting out to do and why?
Yeah, sure. So Glow Capital Partners is a new private equity firm that I've started with Justin Ryan, who is also the chair of Adore and was our investor when they came into the business via the Quadrant Growth Fund in 2019. And what we really want to do is provide growth equity in a partnership model to what we see as really future-focused founders. Something that we feel has been, or certainly my experience has been, that has been missing from the private equity space is something that's really founder oriented, and particularly from the perspective of the founders who place emphasis on things like culture and values and sustainability and diversity and inclusion and integrity. So good people doing interesting things is kind of how I think about that, but particularly looking in the breakout growth stage. So companies that are sort of have achieved a bit of scale, but are going to need some capital and a partner to take them to the next level of growth, like particularly if that's sort of scaling globally. And obviously, Justin and I both have a great amount of experience in e-commerce and consumer, so that's kind of a natural place for us to start. But really thinking about any industry where technology is being used to disrupt the status quo. So yeah, very, very exciting things. So yes, still staying in my role at Adore, which is as Chief of Innovation, so a much more strategic role. But yes, adding investor to my bow as well.
Yeah, I can imagine you're going to be even busier than you are already, which is a good thing.
I like being busy.
Yeah, well, you've done it for so long, so it's probably like in your DNA now.
It is.
Tell us a little bit more. So how are you? I know it's early days, but how do you, like, where do you see the kind of the pain points for businesses in this respect? So, are they going to be businesses that are larger? So, the valuations are 50 million plus, 500 million. Like, how are you going to position yourself in this ecosystem?
So our intended check size is sort of 20 to 50 million. And so we're looking for businesses that kind of have enterprise values of, kind of between 30 to 100 million. So it's businesses at the stage where, maybe the founders are looking for a little bit of liquidity. You've worked really hard on something for 5-10 years and have put everything into growing it, but, ready to take a bit off the table and de-risk a bit, but also get ready for the next big step up in growth. Certainly my experience is that scaling, while exciting, is really hard. It's really hard to do by yourself or without access to capital. And yeah, certainly my experience is that the right partner at the right time can really de-risk so much of that fast scale up process, and to bring in a partner with that kind of expertise and experience, and who also is respectful of the fact that you don't want to sell out everything that your company stands for. Like we think businesses, like particularly in the consumer space, businesses having purpose is really important. And
for sure.
and so you need to have a supportive partner to make sure that continues.
I think too, there's a certain level of nowadays, it seems to me, from consumers, there's also a certain level of kind of accountability. We've gone from kind of like a one to many in terms of audience. When you get on radio, you get on TV, and it's kind of like, this is the corporate identity and this works, and people trust in the corporate identity. And there's a lot more nowadays that people want to know who started this business, what are their principles, what do they stand for, and are they aligned with my interest as a consumer? Because people want that transparency.
Absolutely.
One of the things that I thought would be really interesting to ask you, because you've been in the situation a few times, is basically, what are some of the things, if you can think of any off the top of your head, that a founder would say to you in a pitch that would really just put you off? Are there any things, and I imagine you have a lot of people coming to you already to try and just talk to you about business. What are some of the things that people just say and you're just like, I don't think this is going to, I don't think we fit?
Look, I think I would have reservations about any business that doesn't really have any diversity in terms of its leadership team, which is not to say that that we definitely wouldn't go there, but typically I would see that as an indicator of quality. And if everybody on your leadership team looks the same, I would have some concerns about how are you making good decisions, because all of the research and all of the data suggests that diverse leadership teams make better decisions that lead to more profitable outcomes and fast growth and all of those sorts of things. So I would definitely see that as an indicator, and particularly if the company didn't think that was important or wasn't doing anything about it. That would definitely be something I would look at. I think, what else?
How about in terms of team? How would you, before you invested in some of these businesses, would you want to go and experience what the team culture is like? Go to the offices, speak to people? How would you do that kind of part of the process?
I think you definitely talk to as many people as you can. I mean, yes, you want to do your research with customers, so you'd be looking at what kind of reviews is this business getting online? Like, are customers getting a good experience here, or are there lots of people complaining? What does their staff turnover look like? Like, are there lots of people who used to work here, and maybe more than there ought to be? And then you would also look at how do they interact, with their suppliers, for instance. Are they a good customer, or do they throw their weight around? Like, what are they like? So yeah, I think that's all. I think that's all super important. What else do I look at? I mean, you obviously prefer sort of sectors that have tailwinds already, but I think there's also still opportunities for more perhaps sustainable or better options in categories that aren't necessarily in growth. And I think who gives a crap is a really great example of that. I mean, it's not like toilet paper is a super growth category, but they provide such a compelling and alternative and a loved brand in a category that's it's like a sort of a household consumable, which I think is amazing. But then also beyond that, you can come across brands that have a really compelling purpose and are creating a category. So I also invested in a non-alcoholic beer brand called Heaps Normal, which is doing incredible things in the alcohol-free space of just normalizing lower alcohol consumption, but without preaching to people. And I think my experience with that founding team, I actually mentored them through the Start Made Accelerator, and my experience with them is they, all the founders in that business really believe in what they're doing and care about it. They're not just going, oh, here's a market opportunity. It's like, no, this is, from the heart believe that this is something that they need to build. And for me, founders with that kind of purpose and that kind of intent those are the founders that will be able to overcome any obstacle, because, you know, there is something more to it than just building a successful business. Like, they actually care about what they're trying to achieve for their customers.
I think Monique, our producer, she went to a parlour gig where Heaps Normal was on the menu. So
it's everywhere now. They're doing so well.
How about then just one more on this one, which is like, how do you suspect deals will come to you? Because I know you've invested in a few of these businesses already.
Yeah.
How are you going to source deals? Because, you know, from my experience, Australia's a good sized market, but it's not massive. And they're great businesses that are starting, but those that fit right in your kind of target, your sweet spot, are there's probably, you know, not as many, and you want to attract them. So how do you think you'll go about doing that?
Well, it's funny, kind of part of the impetus for starting Glow was that, particularly since Adore's IPO, there were so many founders coming directly to me and just saying, hey, I want to do what you did. I don't know where to start. How do I find the right partner? Like, you know, how does this work? Help hook me into this whole kind of ecosystem. So these are people, you know, and often it's a lot of women founders who have traditionally just kind of sat outside the regular sorts of networks or the structures where, you know, this is the way it's always worked. And so I guess our thesis is that, yes, there will be things that come through sort of the traditional M&A advisory network, and I believe that we'll be a partner of choice, but also there's a lot of founders out there who I think have been kind of reticent to engage with the existing funding landscape because they don't see anybody there who gets them. And I guess we're, you know, from the get-go making it very clear what Glow is about and who it's for. And so certainly since, well, we only launched last Thursday and my inbox is heaving. So I think deal flow will not be a problem. I feel like we're drinking from the fire hose at the moment, in a good way, but it's a lot.
Well, that's right. You got to turn over rocks too, right? Like there's going to be wrinkles with, you know, there is a wrinkle with every business, and
of course,
yeah, it's just about working your way through them. But oftentimes in private markets, it's finding the deals that are the hardest part. So
sure,
if you can be the preferred, you know, supplier of that capital, then that works perfectly, right? Falls into your lap in a sense. Yeah.
I mean, I think that's also too one of the reasons why we've committed to like 50-50 gender diversity within the Glow team that we're building, because I do think that will help us see more things. I think there's a lot actually that's just getting missed because there's still only, well, in private equity, it's been, in terms of senior positions, has been at 3% women for the last 6 years and just hasn't moved. So I think there's a lot that's getting missed.
It's madness when you think
Isn't
about
it? I know
50% of consumers.
It's not great. It's not great. 50% of consumers, but even like 80% of purchasing decisions are actually controlled by women. So yeah, it's a bit mad.
Yeah, well, that's definitely a competitive advantage for you and the Glow team.
I would think so. Yeah.
Yeah. This is an interesting question. Is I was going to throw a hypothetical at you, which is basically just if you were starting out as a business, say, and let's say you could have, you know, $500,000 and you wanted to build a business, let's just say like Adore from the get-go today.
Sure.
Who are the first 3 people that you would hire, and what would they bring to the table?
Oh gosh. So if you're talking about the e-commerce and consumer space, you need amazing marketing talent. Like that's absolutely fundamental. And I have rejected deals that have sort of come across my desk where they do not have incredible marketing talent in the founding team. I'm like, you know what, it's too hard. It's too hard without that. So yes, you need incredible marketing. You need someone who can build a fantastic customer experience. And then from there, it's, I don't know, depends what kind of business you're building, really, doesn't it? But maybe it's operations, maybe it's product development, But those are sort of the three key elements. Like, you need an incredible product, you need, amazing marketing to get it out there, and then you need someone to make sure that your customers are happy and will come back and will tell their friends.
Yeah, it's really interesting because there's kind of this belief that you basically need, a technical professional, a hustler, a salesperson or marketing, and someone that does operations for the CEO.
Sure.
And I think if you can find those, which are very similar to what you've just outlined, I think those are kind of the recipe that go into a lot of successful, not all, but a lot of successful startups in my experience. So they're really interesting. And it's interesting, I guess, the order in which you answered that question. You chose marketing first, right?
Yes. Yeah.
Which is so fundamentally important. I think a lot of businesses often neglect marketing because the founder happens to be, like, even in small businesses, I should say, not just necessarily like startups and really entrepreneurial businesses, they often tend to think about it's a byproduct. If we build the product first and build it, they will come. But sometimes they don't rock up.
Well, I mean, if you're doing marketing right, like, I'm not just talking about marketing in terms of, going and advertising and promoting something, but marketing should be that, the whole process of, what is your brand about and what does your product say and how does it communicate that, and who are we talking to here, and like, marketing should actually be a core part of how you even develop your product and what you're going to stand for.
For sure. Final question from me then, Kate, which is just, as you look back, Adore's now $450 million business. At least that's what Google was telling me in the market cap this morning when I checked it. As you look back over the business and what you've done with it, what are you most proud of?
What I am most proud of is actually the people and the culture that we built. To be honest, it's like, I mean, your market cap and all of those things, like, those are wonderful. But if it was a horrible place to work and it was, sort of churning and burning people, and I don't feel like I would be happy about that. The thing that is, I think, a great joy and a great privilege is to have it be a place where it is safe and people feel included and are able to do incredible work and really grow and flourish. It feels like having grown a beautiful garden, honestly. And so that's, to me, that's a lot more important than the size of the market cap. I think what it means to people's lives, of the people that work there, but also of the customers that we serve. I will never, ever, ever get tired of reading customer feedback, because it's those little moments of the way that, that you've provided them with something in their day. Like, I was having a really terrible day and everything was going wrong, and then my Adore order arrived and there was a Tim Tam in there, and and I got the products that Joe and Hannah suggested on the podcast, and now my day is great. It's like, well, fantastic. That's what we're here for. That, to me, is the exciting stuff, really.
I'd love to ask this question again in 10 years. Once Glow is off the ground, and once we see where Adore goes next, because I think, it's a really exciting next phase for you, because you're going to empower other founders to do something similar. And that's just as exciting, if not more exciting in some respects. So, Kate, we'll provide all links to Glow in the show notes. So if any of our investors want to inquire, they can. We'll also provide links to Adore and all the podcasts as well. So if you're out there thinking that you might get something special, even for Christmas that's coming up, or anything like that, you can start planning ahead.
Definitely really plan ahead. Yes, absolutely. Yeah.
Wonderful. Kate, thank you for taking some time to join me on the podcast today. I really appreciate it.
Oh, thanks so much, Owen. It was really fun to chat.